Hi, this is Randy Finney with Right Side of the Chart, and this is an early session update for Thursday, October 30th, 2025. It is 10:15 a.m. Eastern Time. I'm starting the video, so we're 45 minutes into the trading day. I just want to give a reminder. I have to leave town today, shortly after lunchtime, be out the rest of the day and out all day tomorrow. So if possible, tonight, if anything big happens tonight, I'll try to get you an update on my laptop. If not, we'll pick it up next week. But that's, again, why I do these videos. Everything in the market to me is about having a plan, identifying things, potential opportunities before they happen, not after they happen. Anybody can subscribe to the news feeds, Bloomberg, Wall Street Journal, and read about what happened in the markets today. My job's here to try to predict what will happen. Or not what happened yesterday, but my job's to predict what happens tomorrow. So, and going forward. So let's talk about the VIX. I'll say, and I have recently what I've been saying, what I said back here, what I've said back here, that the VIX, there are never any guarantees with the VIX at all. There's never any guarantees in trading with anything, but what I can tell you is the RR seems very attractive right now. Once again, the risk-reward profile after breaking out of that wedge, waking up, perking up, hitting that 28.62 target. We pulled back. We're still above the trend line. And again, I'm seeing more and more things in this market to give me a pretty high degree of confidence that we're not going to get that blow-off top scenario or the strong year-end finish that most think. We'll see, and the thing about it is that's what stops are for. So if you're trading the VIX, remember, I like the futures, but I know a lot of you don't trade, so I give you a proxy, VIXY, which tracks short-term futures, and it's all still one of the same trades. We've traded this one. This is what I've moved to in the recent years. Because it's an ETF, I personally don't, unless it's an IRA account, don't like trading ETNs. You get those pesky little what are the K1s? No, yeah, I think the K1s, and they usually come late, and then it's a pain on your return. So either way, you can use this as a proxy, and this R1 was the first resistance level. That was our buy signal. Hit the first target, pulled back, and we still very, very much have the positive divergence that was in place at this recent low. And the $1,000,000 question is: this the first tremor, if you will? Just like this one here, at first target, pulled back almost exactly to about the, very close to the breakout point right there, and then went up to hit T2. So we'll see. I still like it. And again, it's going to depend on the rest of the big tech stocks that report tonight to take it home. So I will not be around right after the close today or through tomorrow. So you guys should have your ducks in a row, have your trading plan. Those bullish, where you plan to buy pullbacks to or breakouts above resistance. There's not a whole lot of resistance on the market. But look, I'm going to get into this video. It seems, and this is how trading works. It always has for me. For the last couple months, we've been slogging along. Hit here, miss there, hit here, miss there. More hits overall. On individual trade ideas. And again, I spread my bets. I use individual stocks, long, short, different commodities, fixed income, all asset classes. But lately, we've been just hitting price targets and a lot of short trades. So what I'm going to do in this video is I'm just going to highlight, it's not all inclusive. Some of the trade ideas that stand out right now, updates on some of the existing ones, some new ones I have, and I want to cover, time permitting. I'll touch on the business services sector. I actually did a video for you yesterday after the close. Some of these videos take a while. That one I kind of went into depth, and what happens, and you can't see it on this screen. I have this video recording software, and between charts or when I move on to a different category, I'll hit the pause button. And quite often when you go to re-click it to continue the video, it doesn't take, and it's very hard. And I've looked at other screen recording platforms. So the long story is, the bulk of the components in that sector, the important ones, didn't get covered. And this was by the time I was done with that uploaded process, it was well after 5, and I was just burned out. So I'm going to show you just a couple trade ideas from that video yesterday, and we'll do the same thing here. Some of the price alerts that I've had going off. Again, I'm trying to share both. I'll give you updates on existing and some new trade ideas. And so we'll get to that in 1 second. But there's the VIX starting to wake up, and to me, not pricing in at all the last couple days. You know, we had the Fed's out of the way now, pretty much a non-event. Initial pullback was a little bit, but let's just call it a non-event. Same thing with the big tech stocks that reported yesterday. Let's just call it a non-event because the market hasn't moved much. So again, I think the upside potential, assuming any or all of my price targets are going to be hit, it dwarfs the downside risk wherever, again, your stop will be commensurate with your price target or targets in your specific entry price. So I'll move on there. And like I said, I do believe we'll know by next week. Remember, the markets can probably flounder around today with a couple big earning reports on deck. And then tomorrow, all that'll be out of the way, but it takes a day or so for all market participants to kind of thoroughly process and vet through all the the earnings conference calls and forecasts and all the numbers. But with that being said, so far so good. This is the Nasdaq 100 futures. Remember, I do trade both personally and what I share on the site, different setups on different time frames. I wear multiple hats. Sometimes I am a day trader. That by definition means you're going to take a trade during the day and close it out by the end of the night. And that's more of a function of the time frame I'm trading off of. Usually it's a 1, 5, 15-minute charts. Most of those trades I don't even post because I've done that over the past. Most can't keep up with that. If you're a day trader, you're probably using your own style. And to follow a day trader, I've always said, is like trying to follow Tom Brady or Patrick Mahomes on the field during the game. If you want to learn football, it's impossible. Just stay on my heels, do everything I do. You can't, day trading is in, out, and you can't, it's impossible to get those posts out by the time it's actionable. If you've covered something then or entered a trade or exited, it's too late. So swing trading is what we focus on here. And this is the breakdown yesterday. And so far, so good. We're only halfway down to the first target. I thought about, but I didn't do it, giving you just a minor, I would have named it S1 anyways. It's not enough meat, in my opinion, for a swing trade target, but that was and is the first. You can see those reaction lows right there, and that's so far where they bought it. So the reason I'm bringing it up now, I think it'll break. I would not have named it T1. It would have been S1. When I give you S1, it's a support level that personally it's not worth covering. It's worth noting you probably get a reaction. But once that level goes, then that opens the door for T1 to be hit. Yes, there's a gap right here. Technically, the bottom of the gap is where that candle closed, but sometimes traders will look at the highest candle right there. So they may come in there, but again, I think that will get sold out if this level gets taken. If the gap gets entered, I think it'll be backfilled and then some. And again, I gave you more aggressive targets. The last time we had this sell signal on this short-term time frame, I'd only given you 2 targets. The second and final was hit, and we reversed, went up here. So again, this is a active trade, and then if you are a longer-term swing or trend trader, then you want to focus on the targets I've laid out on the daily and even the weekly charts. Oh, sorry, another busy morning. Had a phone call there to take. So that's it. Like any trade, it either pans out or it doesn't. And again, stops. List stops on a lot of trades that I have a little maybe 1 or 2 targets or a preferred target or a maximum stop. But again, if you took this one, depending on where you took it, you take your target and come up with a good RR. I like a minimum, a 2-to-1 RR ratio. Usually, risk $1 to make 2. 3-to-1 is ideal. And then that'll determine where your stop is. Oh, and then where I was going, that's right. I got cut off here, had to pause the video. And I don't know how many, but I know there's some on the site that think that the market's going to keep going up, at least for the foreseeable future. And the takeaway for you is, I've said many times over, these are the support levels at which you can step in if you're looking to buy a pullback. Because again, when a security is trading at all-time highs or near it, there's no resistance levels in which to trigger a breakout above resistance. So your most objective buy points are going to be pullbacks to support. And so the same thing here. If you bought T2, then you made a nice little push up, and maybe you took some profits recently, and then you can buy back at. This is a pretty. I can just say right now that's the best support. The best of the. It's better support than T1. T1 again, the gap, and there's a gap in QQQ. They're probably going to come in and buy that. But these are the previous highs. That was a breakup. That's a very significant level. So I would put, especially if the things go the way I think they will after tonight, a very good chance that that'll be hit at minimum. And that's going to be nothing big, but about a 3% or so drop. And again, once we get down here, which again, I believe I covered it yesterday. I did 2 videos. One, like I said, I didn't get out because half of it, not half, but a good part of it didn't get recorded. If we get down to this level, we're also going to be testing very key support close to that major reaction low from that Friday a few weeks back right there. So, and that's kind of more of a, I'm going to call it lights out. We'll say that. We'll call it whatever we want to call it, lights out level for the market if and when that goes, I think. Okay, and now for the Kevins of the world and those on the site that only comment on equity market trades. Let's say Festivus for the rest of us, just like Seinfeld. If you remember that old Seinfeld episode, the holiday they came up with, George and his family. Festivus for the rest of us. So all the other things out there. Let's start with Carvana, because that's coming up on T2. We took out T1 today. Trade ideas have been popping lately. Like I said, we're starting to really fire, and and this is a change of character. A lot, and even the majority of the short trades are starting to really pan out. So that tells me, again, I've talked about this. I can't remember if it was in the video yesterday that didn't get out, but I monitor very closely market breadth, and it's been amazing how long, and we continue to trade half of the stocks. I watch many breadth indicators. 2 of my favorite are the percentage of stocks above their 50-day and their 200-day moving averages, both of which are still haven't crossed above that 50 level yet. So we haven't seen such disparity in the stock market ever in history, I believe. I think the stats say that it's just a handful of AI stocks have put such a high, because of their cap weighting, and there's a bear market in a lot of stocks out there. And then what happens is there's mispricing and risk and some other ones. So you get these quick move downs. Here's our Carvana trade. It just hit, we hit our first target here. We shorted it. Where did we short it? Right here, I believe. Hit our first target, bounced, and now we've taken out, T1's clearly taken out. Remember, this was an intraday whip. That's a little, you can see that skinny part. We call that a shadow on a candlestick, the skinny part. And when it's the shadows down below, it's a tail. That means intraday we went, but it was a stick save to park right back above my first target, which is support. And that's a green candle. My candles are color coded to show the close. So there was another intraday, but we didn't print. This is a daily time frame. All that really matters is how you close the day. So this was, and now we've clearly taken out. Now the day isn't over. Sure, if Carvana does this, I'm going to say that's not, we're still well off the highs. Island top candle, which so far is the top. But it certainly won't help the case. See, right now they're buying the 200s. Like I said, both man and machine alike, meaning algos, computerized trading programs, will buy the first pullback to the 200-day in most stocks. But again, now that T1's been taken out, I have a high degree of confidence that we're going to go on to hit T2, T3, and T4. Being my longer term, my fundamental views and outlook on Carvana, I will most likely be extending this trade and adding additional targets, especially, I can tell you right now, if and when T2 gets taken out. When T2 gets taken out. Why? Because once T2 is taken out, so are the 200-day moving averages. And when I look at the long-term chart of Carvana, and I look at all the car dealers, again, I'm the farthest thing in the world from a one-dimensional trader that focuses on any one security, one index. If I'm trading a stock, I'm going to look at that sector it's in. I'm going to look at its competitors, the other components in the sector, and Carvana it's a meme stock pretty much is what it is. Now they have real earnings, but they also have in my opinion, probably some accounting irregularities that will ultimately come to roost. And I've given you way back here, and it's a continuation of that trade. 4 long-term price targets. T1 got hit. It got hit when we covered all shorts, went long as well on the early April lows. So it's nothing more, just like the stock market, than a bounce off support off a price target that didn't change the technicals one bit. The only way it changed them is the divergences that were in at that high when the stock dropped, what was it, 40 something, about 40, I had it, let me try to grab it for you. Because it shows the scope of the move of this stock. Yeah, it was about a 50% drop. So it doesn't look like much, but that's because I'm using log scaling on this chart. So this time around, if my fourth target hit, it's going to be an 85% drop, right? And you can see here, we had, again, all the reasons in the world back then that this was overdone, and that was a brief undercut of the 200s. We covered for the reasons stated at the time, but you can see this stock is in a bull trend when it's above the 200s, and once it takes out those 200s, it's lights out, baby, right? That's how that stock works. So that's why I want to just do these videos and kind of explain that, you just might see levels here, but there's a lot of significance in T2. So there it is. Take it, leave it. At this point in time, obviously that's the initial stop. As each target's hit, you may want to lower your stop, but it all depends on your average cost, average entry price. On a lot of these trades, after the initial short entry, I will highlight objective short entries. And so somebody might have gamed the bounce off of T1 and the initial bounce, and played it for a bounce of whatever, maybe back to the 200-day or 50-day moving average there for 11%. All right, but either way, we're starting to see quite a few of these play out. And we'll see if that trend continues. All right, so what I'm going to do with you here in a second is give you my go over some of the price alerts that I've had fire off. That's the other thing. I'm starting to get an increasing amount of price alerts firing off. I did this for you yesterday in the video that, by the time I realized it was uploaded, and I knew that I had hit the pause button during it. If you want to watch, I'll give you a link to it, but I'm going to redo the whole thing today with the same sector. And that is, let me find it for you. Okay, right here. Here's a video. And again, I didn't send it out to you because it was incomplete. And if I wasn't recording part of it, it's not worth it. So I highlighted, I had 3 alerts go off. This is yesterday. You can see the video was recorded. These are timestamps somewhere. It's supposed to be on there. But I'm going to show you. Let me mute this real quick. It's going to roll into here, and the 3 that I covered, and I'll get to these again. I'll do them because some are in the same sector. But CVS was a standalone. Here it is. So I was covering CVS as a short trade idea for you. Of course, didn't get the video out, and it's playing out. So there it is. So there it is. CVS. I was waiting to report earnings. I'm going to cover it right now. I just wanted to let you know that, kind of kicking myself because of this, not getting a video out to you. Kind of missed the move on it. So it's already at my first target. Either way, what I said yesterday, and I'll tell you now, it was a 10 on a scale 1 to 10 short, and you could have got it fired off in the after-hour session. We had a nice resistance right here. At some point we were long this stock back somewhere in here, and it rallied back to the same level. Again, this was a key level, and we had beautiful setup for a short. We had divergent high. This divergence started here, played out for a nice correction here, back to the 200s. This is where the stock got bullish. It taken back the 200s right here, but put in a divergent high. You can see this first divergent high, nice double-digit drop to also back test this primary uptrend line. But like everything, it's come full circle. I can quite often look at a chart if it's pretty clear and see, it's a pattern run its course. In other words, this divergent high, this bullishness. At minimum, it's just, for a pullback trade. I'm not even trying to call a top, massive top. It could be, but what I gave you, it's 2 price targets right here. And we're coming up on the first one now, 75.23. And the point is, this if we're in a bear market, guys, there's still more meat on this bone. If we're in a if we're about to top out in the stock market, or already have, possible, then this guy goes a lot lower. You know, this is my weekly chart here. That was a big divergent low right there. Double bottom test on the positive divergence. There was a big divergent high. This is not all marked up, but that's the level we just stopped at here. Either way, this is the point I want to go over, are all these other ones. And I'm going to get into these here in the business services sector. But let's rifle through this. So you can see here, these are the last 2 days. You can see I have an increasing amount of alerts go off. And being the flexible trader I am, I'm just as comfortable going long as I am short. So I have both a combination of long and short price alerts. But most of these, what I'm seeing lately, and this is the common theme here, a lot of the shorts are breaking down. One of the sectors I've covered recently, and I'll probably do another update soon, might have to wait till next week, is the leisure sector, as well as the restaurant sector. EATZ is your restaurant ETF. I've shared that with you as a short trade idea a while back. Maintain that. These are the restaurants. It's really a continuation trade from this high. Again, everything got truncated on the April lows for the reason I stated. So a lot of these longer term swing trades hit a target, and for the reasons stated, would cover. And just like the stock market, it's just the balance is carried unusually high, but it kept the technicals intact, just like the stock market, divergent high. And I was re-highlighting it here and maintaining these same targets, and that's it. So now we've taken out this uptrend line. You can see we had a lot of nice, that reaction off T3, split the crosshairs between T3 and T4, but that was the April lows there. Time to cover everything up, go long. And now we recently took out this trend line, so we're back to the old T2, but it's already been hit. So I've already had, once the way this works is check, 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 it opens a door now for these next targets. And it also, guys, this is what I want to kind of convey in this video as I do it, speaks to the overall economy. This is unsustainable. And it's not the fact that, and it's been well documented, if you that the haves, the wealthy, who have a lot of their money in the stock market and in the housing market, have been holding up or filling in the gaps for this drop off in the low end consumer, who's really cutting back. Delinquencies are going up, and the longer this persists, you're setting up for almost a crash-like scenario, a much bigger drop. And it does mesh with my longer-term targets because, and they talked about this in Powell's press conference yesterday, if you watched it. We all know what the wealth effect is. And so, when people are just, their 401ks and their retirement saving, their stock portfolio is going up, they're spending more, that's going to go in reverse. When this thing does finally go down, and the stock market drops, it's not a hard level, it's an incremental thing. With every tick down, 10%, then 20%, then 30% drop. At some point, probably going to be between that 10 and 30% where you're going to start to see the signs, the impact of the higher end consumer starting to tuck in when they watch their Nvidia drop 40, 50%. And their stock portfolio. Again, 10% corrections will be bought up, not going to really change, investor psyche too much. 20% is going to make people start to think, 30, 40, and then you'll get to, you'll be in a full-blown recession at that point in time. Again, simply because of the stock market then collapsing on its own weight. And that same vicious cycle that's been a positive, feedback loop, stocks up, spending up, keeps everything going. The same circle jerk with AI and the big tech companies, Microsoft, Alphabet spending on on NVIDIA spending on OpenAI spending on AMD, however that whole thing's going. And then leisure, the leisure is PEJ, leisure sector. Again, I'll try to get to this one in a separate video, but these are your current targets for PEJ. And again, my point here is, I'll go through these. These are some of those. So Royal Caribbean, these are all ones I had price alerts on last couple days. Broke down. You have this primary uptrend line right here. You have nice support right here, and if you can see it in there, the 200-day moving averages. So this is a short setup I am sharing with you. We are already short Carnival, which has been referred to as the Walmart of the seas. You can again go on social media and see why that is. They have the low price cruises attracting a low, very ghetto kind of clientele on those shorter low price cruises. And I think, again, we shorted for the technicals first and foremost, and I'll get to that in 1 second. I just want to let you know that I'm starting to get breakdowns. This one needs to take out those 200s. Like I said, it just took out the trend line. Once it takes out the 200s, you can see my targets, and there's a lot. This is a big divergent high. A lot of meat on the bone on this one, so I'm sharing that both as a trade idea and just kind of a tell on the economy, what's going on. So CCL, I mentioned, Carnival Corp, gave you that on a weekly chart. We shorted it here at dual resistance, downtrend line, the primary downtrend line, and it still offers an objective short and price resistance. This is support that needs to go 2760. When it does, I kept this one simple for longer term swing and trend traders. You have two sold targets, a target zone that's about 25% lower, and then from current levels, and we're already positive on the short, and then 45% right there. And again, just kind of tells on the economy, if you will. Let's go back here. So next one, CRPT. This was, what's that, yesterday? No, today. CRPT. This is business services. This is the video that I was covering. I wanted to go over a lot of these stocks because, and somebody made a comment today, oh, we had an inverted yield curve and this and that, and the economy is just, we're not having a recession. The economy's strong. Again, guys, these aren't my words. Everybody knows the stock market is not the economy. And what I'm here to do in this video, besides share trade ideas, which I've already have, and I'll continue a few more, is also show you what I believe is strong evidence that the recession's already started or is imminent at this point. And I have, there's a lot of things might have a strong degree of conviction on, but to me, it's about a near certainty when the consumer rolls over, and you're seeing it now. I spent a bunch of time yesterday covering the last couple of days covering the payroll sector, payroll companies, staffing, and ADP, paychecks, and now I'm covering business services, because if the economy is strong, this is another area that's going to tell you otherwise if it's not confirming. And so here's Copart. Now, it has a bullish falling wedge, but a lot of things, as I've talked about, if this doesn't play out in a bull market, you would expect a correction like this. This is more than a correction at this point. We're down 33%. But you would expect, and maybe it'll be the case, guys, and this is why I do these, because let this prove me wrong. There's a measured target, so that wedge, if it breaks out, should at least hit that measured target somewhere up here. And then if it's bullish, it's going to take out the 200s and go to new highs, right? As will most of these stocks. And I'm about to rifle through them. I'm going to do it a lot quicker than I ended up doing in yesterday's video, and I'll make sure I cover some of those. Let me just cover the rest of the alerts that went off. TLT, I already got that out to you this morning, and I was very clear for those of you that, in case there's any confusion, there's two types of traders in this world. Well, there's many types: options traders, futures traders, stocks. I trade both. But like I said, for futures traders, this is, you're having a field day. If you're gaming these little reactions, this is the same exact setup I gave you with a sell signal to come there. That was my first target, hit, bounce. But you see levels in the futures you don't see on the regular ETFs that track the futures or the same underlying asset in the case of TLT. And that's it. So now we need to break this target, and then that one, and we go there. What's that going to mean if I'm correct on this trade? Well, you put some money in your pocket, number one, but it also means interest rates are going to bump back up. And why should they bump back up? Especially if the stock market's going down, that's not going to be a good thing. All right, so I'm just showing you again my alert list, and let's go back to that. IBIT just fired an alert. Crypto is, so far, let's just say waffling around a bit. This is the primary uptrend line. 200 days are just below. Big support there. and this is starting to crack. Now we have a previous reaction low there. Once that's taken out, you have the 200s, and either way, this is telling me I think all risk on assets are going to take it on the chin soon, and that includes Bitcoin in the market. And you have targets here. I've given you related trades such as MicroStrategy and others. I'll try to again cover this next week, but just keep in mind this is starting to crack. Nothing big so far because you have to squint to see, but we are below that. I told you this would trigger the next sell signal, break below 61.55 and that uptrend line right there, which we had a little parked on at that day. So if we, the redder the better. You want a solid sell signal. You want to see a nice red close below this, and then that's probably going to bring more sellers into Bitcoin. IBIT is just one of the big ETFs out there tracking it. UNH price alert because we hit T1 today. I already got that post out to you. RELX, another business service stock, and this is again. I'm going to go into these in a second here. This is massive support. Great, super well-defined support. Starting to crack it. Took out the 200s right here. Peaked here, and again, if the economy is holding up, you shouldn't see this sector look the way it does right now. So again, I'll get into that in 1 second. Booking.com had a price alert go on, but I always check them. It's still not ready. It's very close. This is a super well-defined, clean uptrend line, no violations. 200-day moving averages coming into play, and if and when it breaks, you can see I have targets at minimum. I think this one's coming back to this level here. And again, this is a sector in my crosshairs. It's a recession sector. Does great when the economy is booming. And listen, it's a bifurcated economy. We all know that. I'm not the first one to document this. The low end is really struggling right now, low end consumer. But that doesn't matter because Richie Rich, has, more money than he knows what to do with his checking account. So he's going to Tahiti and Bali, and he's booking, going to Vegas and all this. So these leisure companies have been holding up, but they're starting to crack. And so again, if nothing else, it's a tell on the economy because you have the kind of the blackout with the government data, which a lot of people don't trust anyways. So when Kramer comes on TV and tells you the economy's fine, and you start seeing the leisure sector going, the restaurant sector going, business services, payroll, ADP, like I said, it's mounting evidence in my opinion, guys. And I'm hearing, and I'm so emphatic about it because there are some out there that share views that I do, but the majority on TV are saying the economy's fine, a little slowdown here, a little slowdown in employment, but no recession for this year or probably next year or next year. The vast consensus on Wall Street is we'll finish the year strong, seasonality, blah, blah, blah. Plus, 2026 will be a good year, at least for the foreseeable future. And I'm seeing a lot of stuff starting to crack here. And then finally, okay, CVS. So that's all the alerts I had go off. Let's go back to the business services sector. And what I'm going to do for you here, and this is what I tried to do yesterday, I always, when I cover a sector, normally I'm going to sort them on my watch list by market capitalization. That gives me the biggest companies up top, and they're the ones that are going to have the biggest impact on the sector, right? Now, I can play the game if I wanted to kind of just make a case. Let's say I'm bearish on this sector, which I am. I could sit in there, sort them by biggest losers, and you're going to see the ones that are already just, headed down and look like death. And again, that's something to be concerning because these are stocks in the business services sector, and they're all, a lot of these guys are in death spirals, headed towards, so a lot of them look like they're headed towards bankruptcy. These are just today's gainers and losers. But let's look at market cap. It's just like going to the S&P 500. You could do microanalysis. You can have the most bullish or bearish charts in the world on the bottom 100 stocks in the S&P 500. But if you're looking at the bottom 100, they just don't move the needle. Collectively, you add them all up, they're not going to offset what the top 10 do to that tremendous disparity in market capitalization, because the S&P 500, like the Nasdaq 100, is a market cap weighted index. So that's why I focus on the big names. Let's just do that real quickly. That way I don't need to go through the whole list. And this is what got cut off yesterday. So RELX, which I just had a price alert, has already put in a divergent high, broke my first support here, broke the second support. That was a nice trading range. and it's been consolidating in there, and it's just starting to crack right now. And again, this is a daily chart. I don't have it marked up for targets. Here's a weekly chart. And this just looks like a major top to me. And there's that support. You can see it very clear on the weekly. I'll just tell you right now, so we can revisit this maybe someday later. This is where this stock is going if it can't hold this level, meaning maybe it breaks it and has a little whipsaw. But if it closes solidly below there, especially on this weekly time frame, it's dropping down here at minimum. And what's that going to tell you about the economy? Again, these are business service sector stocks. You can go to Yahoo Finance. They give you a profile on a company. You can see what exactly they do. 28% drop, if I'm correct on that one. CTAS, Cintas, the big one. I believe this is uniforms, right? For businesses, huge company. You see their trucks everywhere, been around forever. And again, if the economy is humming along, why is this stock? And it's the technical posture. It's not where it is now so much. It has dropped 20% with the stock market at or near all-time highs, but more so this technical posture. This is a big divergent high. There was a sell signal there, took us down to this primary bull market uptrend line right here off the 2020 lows. That was clearly taken out. Oh, guess what? With the 200s as well. And this is a common theme. So when you see not one, but multiple key support levels get taken out, those are more powerful sell signals that are likely to stick. Now, just like RELX that I just covered, it has a very comparable, very, very well-defined support. This to me is it looks like it's a continuation pattern. It's a trading range. And the way these work, it's bullish if you break up here, especially if you don't have divergences and overbought conditions. Yeah, maybe the market's going to go on to, in this sector, in this stock, particularly new highs. However, the fact of the sell signals that I see tells me this stock is probably topped and it needs to take out that level. If it does, yeah, I can give you a target here. If you feel like trading any of these, just let me know and I'll have to sharpen my pencil, give you additional targets. But I see this one dropping first to 163, little hiccup there, 11% drop, and then ultimately down to 28%. If I'm correct on that call, I promise you there's problems in the economy. If Cintas drops down, that's a 42% drop to this 131 target I'm calling it down to. TRI, Thomson's Reuters, you guys know that, big one in the financial markets, so they're providing data and all that. Again, you can see these very comparable key support levels. This is the top three components. I don't need to go through them all. I'll go through a few more. And look, there's something for everyone here. Those that think the market's going up, this is I'm not going to call it a 10 for me, but it would be a 10 for you if you're looking to buy pullbacks to support in this sector. That's solid support. However, we all see what we want to see. Looking at charts is like looking at those Rorschach ink blot tests, right? We all see what we want to see. A bull sees a good pullback to support, an entry, and the stock doing this. I see I have price alerts set on these guys. Wait for that one to break. And if it does, I'm going to look at what I'm doing right now. I'm going to go through at least the top dozen components in this sector, and the more I see breaking down tells me something's wrong in this sector. And again, this isn't this isn't the pot stocks, some obscure little sector that really doesn't matter to the overall economy. This is right up there with the payroll stocks that I covered the other day. So what I'm trying to do is, where there's a blackout and the rest of the world's scrambling right now, what's going on? They're just assuming everything's hunky-dory. I'm trying to show you real time what's really going on with the economy. Remember, again, the stock market is not the economy. We know that. And what happens is the longer there is a disparity between the economy doing this, the real economy, and the stock market doing this, the more profitable the mean reversion is when you short that once the masses realize what I call the point of recognition. Once they realize, these quarterly GDP keeps getting revised downward, the jobless numbers keep getting revised upwards, blah, 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 and you see a very fast rush for the exit. So look, we're not there yet, guys. A lot of these, some are just starting to crack, some are on support. And maybe we do this, And guys, I may not follow up on this sector for 6 months. Maybe we do this and then 6 months we're here again. Then I talk about it, right? So I'm giving you the things to watch. You can easily set price alerts. And then you decide if it's important or not. Or maybe these things don't matter anymore. Maybe the economy, the consumer spending, which is 70% of GDP, maybe you decide that it doesn't matter. All that matters is what, how much money is being spent on AI. And if that's your trading strategy, just have a plan. For those that come out and cheer the market every time it breaks out the new highs, what's your plan? Are you buying those breakouts to new highs? Contribute. If you have a trading strategy and you're buying pullbacks, then that's it. Let us know where you see support. Share your trading plan. All right, so a few more here. CRPT, I think I already covered. Just had an alert on that. Nice support here. Bullish falling wedge. But in bear markets, these bullish wedges either fail to break out or break out. This one, if it breaks out, it's going to probably go hit these 200s and that 49.90 resistance and then come on down to the next target there. But it is setting up in a bullish falling wedge. So again, like I said, there's something for everybody. If you feel confident that the economy is on solid footing, then here's a chance to buy Copart down off the highs 34% at support with a bullish falling wedge. But this tells me that this stock has changed trend, that this wasn't just a correction, that we took out the 200s. A lot of times I go out to the weekly charts and I see the big picture there, which I don't think most people do. I look at all time frames. And this tells me here's our primary secular bull market uptrend line off the 03 lows. This was the cyclical bull market off the 2015 lows. Very, very well-defined trend line. By that, I mean, look at all these reactions. And the 200-day moving average is riding that stock up, and it broke down. So ultimately, before all said and done, this stock is probably going to fall down here. And guys, that would keep it in a bull market, a longer-term bull market. It would be a cyclical bear market. It would be a drop of 61%. Extremely profitable to trade if you short it, and then cover there and go long, and that would be the time for at least a rally. And then down the road, if we break this, then we're looking at something just much uglier going on in the economy. But that's so far away. I just wanted to kind of paint the bigger picture, and that's what goes into, my analysis. Do I buy this stock right now at support, or do I set a price alert, which I've done, and wait to short it if it breaks that support? VRSK just got clocked. I covered it. Yes, I can't remember if I covered it in that video that didn't get fully recorded or not. But right down, I had this level here, 199.08, 198.08. Hit that level. That's price support right there. And there's a great example. Here's a really good example I wanted to share with you. So you get these, divergent highs. And not always, but more often than not, they're good for corrections. That was a divergent high drop. That was a divergent high drop. That was. But it's really just one big, we've been diverging that whole time period. So it means prices keep going higher with the indicators continuing to go lower. That's negative divergence, right? And each of those were just good for corrections as it continued to diverge higher until what happened? It took out this uptrend line, not primary, but it's a key uptrend line right here. And at the same very day, it took out the 200s. That was a powerful sell signal. I wasn't watching this stock then, or that would have been my kind of setup. I would have given you a short trade idea. From there, the stock has just fallen, not from the highs, from that breakdown point, 31%. So again, what's going on in business services? I'm not cherry picking these. I'm going through the top components to show you these are the biggest companies in there. And look, extremely oversold. But the example I wanted to give you is, look at this. It had and I had this already line on here with you, created back on 10/22. So you can see before this ass beating after earnings yesterday. But I didn't share it as a long setup because I didn't have confidence in it. You had a perfect, nice, clean, bullish falling wedge pattern, complete with the requisite or preferred positive divergence. But what happened? This is bear market action. It didn't break out, number one, so no buy signal was triggered. and it just continued its downtrend. So what happens is in bull markets, things like bearish rising wedges are, bear fodder. They're just, sometimes they break down. Sometimes you can trade them. We do a lot. And sometimes they don't even play out at all. You just continue up. So in a bear market, and this is early, just kind of one sign that this may be the start of a much larger drop. You get these textbook looking bullish setups. We were at support as well. Uptrend line support. We were at triple, double support at least. Primary uptrend line. So this stock had every reason in the world technically to break out of that wedge, bounce, and at least run back to the 200s. And instead, it just got clobbered. And again, I'm not picking, the popcorn making sector of the market. This is business services. This is an important sector, and it's rolling over just like the payroll processors and everything else, telling me that there's the government data is just not accurate right now. The market's a much more accurate predictor. Equifax support. All right, I'll move on. I told you I wouldn't cover them all, but global payments. You can see why is global payments peaked here. Keeps getting rejected at the 200-day moving averages. Just recently rejected at the 200-day moving averages, the blue and red line. And so that's it. I can rifle through there. And those that have held up relatively well, like RBA, which is RB Global, are starting to now break down. So this is why I do, again, these long-winded videos and kind of explain. This one, love those 200. See the blue and red line? Look at that. I mean, have you seen a stock behave so well? Boom, boom, boom. And then what happened? This is why I love technical analysis. Breakdown, back test, rejection off the 200s. So if you miss the breakdown, you were given a second chance to short this stock back on the 200s. And it's not far off it now. Now at this point, you already had to maybe wait for the break of those recent lows. Oh, but you also took out this super well-defined uptrend line at the same time, and back tested that as well. So where does it go? Well, a stock like this, I would look at the weekly chart. I haven't marked it up, but I'll tell you right now. I'd have to study it a little further. All right, guys, I think I'm going to wrap the video up here. You get the gist. Those that are holding up in this sector are set up for a big reversal, big divergent high, wedging up. Breaks that level, first target 70. This is ULS, by the way. $74, then 63. I have a high degree of confidence to consider this a short trade setup with a sell signal to come on a break of this uptrend line / rising wedge. First target hit 74 would give you about a 7% drop. I have a high degree of confidence whether we get a reaction there. I favor a reaction, but whether we get one or not. Next drop down to 63. That's a 13% drop. Then you have the 200-day moving averages and the uptrend line and price support. This is what I call confluence, a triple support. Massive if it breaks. It's going to tell me this stock has probably started a new downtrend, new bear market, and will probably go down to this level here. You've got the gumption to do it. I think the breakdown's imminent. You short it here, you're going to make 40% on a short trade. And if you do that, you give yourself, let's say, a 10% stop loss. That's a 4-to-1 RR, very good in my book. You could keep it a little tighter than that even if you want maybe an 8% stop loss. Or wait for the breakdown, or both. That's what I like to do when I have a high degree of confidence. I'll take a starter short, adding if and only if I get the sell signal I'm looking for, such as a break of the trend line. All right, I'm going to wrap it up here. Yeah, let me do that. Let me wrap it up, get the video out to you guys. I'll do my best to answer any questions before I leave town today. This has been Randy Finney with Right Side of the Chart. Have a great day.